Hello and welcome to my YouTube channel. I'm Safir Ahmed, a senior lecturer in accounting and finance at a UK university. I also work with ACCA as an early career ambassador. In this video, I will show you how to attempt the practice assessment of tax processes for businesses. Obviously, this is relevant for AAT level 3 tax processes for businesses. So I'll be making a few videos on this, as one long video cannot be recorded on all different 8 tasks. Now, first of all, when you attempt AAT practice assessment or your actual exam, always read these instructions carefully. As an example, as you can see, one of the bullet points says you must use full stop to indicate a decimal point. So for example, write 100.57, not 100.57. So if you enter incorrectly, even though you've done everything correctly, you won't be awarded a mark because the software is set as per these instructions. So let's make a start. So this is the first task. Okay, I'm just trying to make it slightly bigger so you can see it fully. Okay. Before I go through this task, let me remind you something really, really important, which is the reference material. I'm sure you can see the list of the reference material. So please don't burden yourself to remember everything which is already provided to you as part of the reference material. So understand all of the concepts and understand how to apply them in a given situation. But in relation to the reference material, please make use of it. So once you will be practicing this as part of the practice assessments, practice assessment 1 and 2, this will really help you in your real exam as well, because you will be fluent in kind of exploring information from the references. As you all know, that the time management is really important in exam. Okay, so let's make a start. So they normally tell you information at the top of the task, what this task is all about, what is tested as part of this task, how many parts you need to attempt, of course, as part of these tasks as well. So the first one, identify which one of the following statements about HMRC is correct. So the first one is HMRC is relevant tax authority for VAT only. Now we know that that's incorrect, because remember the HMRC deals with all of the taxes, or in other words, majority of the taxes, because remember, council tax is dealt by local authorities, local councils. Similarly, road tax is dealt by DBLA, as you know. But other than that, whether it is corporation tax, income tax, national insurance contribution, national insurance contribution, by the way, is a tax as well. So all of those taxes are administered by HMRC as well. So this one, we know that that's incorrect. Next one, HMRC is responsible for the payment of VAT to all VAT registered businesses. And we know that's incorrect as well, because registered businesses, they are responsible to pay on time VAT and make the submissions on time as well, because that's the law. The registered businesses are responsible, not the HMRC. Third one, HMRC uses the VAT guide and supplementary notices to show how they will interpret VAT law. But that's correct. We know that. If you go to HMRC websites, you can find a lot of information and guidance and supplementary notices in relation to VAT. So this one is definitely correct. But I still want to talk about the fourth one, which is how that is incorrect. HMRC regulates VAT outside the UK. Now we know that HMRC regulates VAT inside the UK because it's a UK taxation authority. Okay, so let's move on to the next part of this question. Part B. Match the statements below with the correct type of supply. These supplies are not chargeable to VAT. So of course they have given you drop-down menu. So the first one, these supplies are not chargeable to VAT. The drop-down menu, they have given you exempt supplies, reduced rated supplies, standard rated supplies, and zero rated supplies. Now we all know that the exempt supplies are not chargeable to VAT. Now students often get confused that how come zero rated supplies are chargeable, because there is no VAT on that. Now zero rated are chargeable, but at a zero rate. So they are still taxable supplies. They are still chargeable supplies. So what's the key difference between zero rated and exempt? Zero rated, that these are chargeable supplies, but at the moment, HMRC is charging 0% VAT on that. They can change that in future, but exempt supplies are exempt, that is not chargeable supplies at all. As an example, your tuition fee, for example, is not chargeable to VAT, that's exempt supplies. Similarly, health and social care services, and of course, some others as well. But just giving you a couple of examples. So yes, we know that the supplies which are not chargeable to VAT is exempt supplies. Next statement, which is these are taxable supplies, but the amount of VAT charged is nil. And we know that this is zero rated supplies. So zero rated supplies, although it's chargeable, but at nil or at zero. The next statement is these supplies include most taxable products and services. So we know in the UK, majority of the products and services are chargeable at 20%, which is standard rated supplies. So from the drop-down menu, it is standard rated supplies. The final one, which is VAT charged on this type of supply, is greater than nil. So which is that there is some rate applicable there, but lower than the usual rate. So the usual rate they are saying is standard rate, which is 20%. And so anything between 20% and zero is reduced rated supplies, which are chargeable at 5%. So answer to this will be reduced rated supplies. Okay, next part of this. TC Footwear Limited started to trade on 1st of January 2021, selling shoes for both adults and children. Now, adult shoes are chargeable at standard rate, 20%, but the children's shoes are chargeable at zero rate. Okay. Sales for the first 6 months are shown in table below. So they've given you both sales for the adult shoes and children's shoes. Now remember that when we determine the VAT threshold, we are looking for the chargeable supplies or the taxable supplies, which are 3 of them, as you know, standard rated, zero rated, and reduced rated. The only type of supplies which are not counted towards the VAT threshold when we are determining whether a business has exceeded the threshold limit, 85,000. So that one is not included, but everything else is included because all of the other supplies are chargeable, whether it is zero rated, reduced rated, or standard rated. Now, if you add both of these turnover sales, so 14,200 plus 8,300, 14,900 plus 8,500. So cumulative turnover. So when you keep adding those, you will notice that in the month that when the VAT threshold is exceeded is 85,000. The key thing to understand here is that you will be adding both of these sales. One of them is standard rated sales, and the other one is zero rated sales, but both of them are counted towards turnover for the VAT, for VAT registration purposes. Okay, so the question is basically identify the month end that TC Footwear Limited will exceed the current VAT registration limited. So once you will be adding those, you will notice that in April, it exceeds 85,000. So therefore it will be April. So what you need to do, you need to enter the full date, day, and of course, the year as well. So once you click on that, it will take you to the calendar, and then you will be selecting. I'm sure that you won't be seeing that here, but when you will be attempting it, if you go to the month of April, and then of course the last date of April, which is 30th of April, and which year it is, well, whichever year they are actually they mentioned. Okay, so you will be looking at the when this person has started trading, which is from 1st of January 2021. So 30th of April 2021, the business has exceeded the threshold limit. So this will be 30th of April 2021. Okay, let's move on to the next part of this task. Identify whether the following statements are true or false. Now, you got to be careful with these ones because quite often the student miss a single word and that changes your answer. You need to understand, you need to read it and interpret it in the correct way. So TC Footwear Limited will exceed the VAT registration threshold using the future turnover method. Now we know that it's not future turnover method, it is historical turnover method. So therefore, this will be false. Second statement is TC Footwear Limited must notify HMRC within 30 days of passing the VAT registration threshold. That's true. That's the law. That's a rule set by HMRC. The final one is the VAT registration for TC Footwear Limited will take effect from the date the VAT registration threshold was passed. The VAT registration for TC Footwear Limited will take effect from the date the VAT registration. That's not true, because remember that the date the VAT registration, or in other words, the business is registered for the VAT rather than when they exceeded the threshold. Okay, so this will be false because of that reason. Okay, so let's move on. I want to cover at least 2 tasks in each video. So I will need 4 videos in order to record all of the YouTube videos in relation to this practice assessment 1. And then of course, I will be recording on practice assessment 2 as well. Again, they tell you that what this task is all about at the top of the task, and then how many parts of this task is. So this task is about calculating and accounting for VAT. This task contains part A to D. Tiffany is a trainee at Simple Accounts Limited. She would like some help understanding about VAT. Fine. Complete the following sentence statements to assist Tiffany. The goods and materials bought by a business and the expenses incurred are called. We all know that any VAT on that is known as input VAT, input tax. So the options in the drop-down menu they're given you is output tax, input tax, outputs are inputs. So we know that this is input tax. The VAT due on taxable supplies is code. So this is they're talking about the sales. So any VAT on sales, remember, is known as output tax. Okay, let's move on to the next part of this task. Tiffany has asked you to show her how to calculate VAT at the standard rate on net and gross amounts. So complete the following table to assist Tiffany. Round down your answer to the nearest penny. Now that's very important. When they say round down your answer to the nearest penny, which means remember that if it will be 10.899, you will make it as 10.89. So to the nearest penny. For invoice A, calculate the VAT using the net value. So VAT using the net value, remember that you calculate it times by 20%. Net value is also known as VAT exclusive amount. They might use that word as well. So the first one is 25.04. And how I calculated it? So the net amount, 125.20 times by 20%. For invoice B, calculate the VAT using the gross value. Now remember, from the gross value on a standard rated supply. So remember, these are standard rated supplies. Now please be mindful that if they ask you about reduced rated supplies, your calculations will be in line with the reduced rate, which is 5%, of course. But in this case, it will be 20% because it's based on standard rate. So in other words, these are standard rated supplies. Now remember that the way you calculate it is divided by 6. Now, if you don't understand why divided by 6, now gross value is, remember, 120% because it is VAT inclusive amount. So 20% VAT is already included in that. So in other words, the VAT will be 20% of 120%, 120% value, in other words. So it will be 227.88 divided by 6, or you can calculate 227.88 times by 20 divided by 120. So 20 divided by 120, if you simplify it, it gives you 1 divided by 6. And if you simplify it more, just divide it by 6, because you know that if you multiply something with 1, it is the same value. So 227.88 divided by 6, and that gives you 37.98. Okay, let's move on to the next part of this question. Tiffany has some queries about VAT invoices. Identify whether the following statements about invoices are true or false. The first one is a simplified invoice is issued by supplier who are not registered for VAT. That's false because remember, simplified invoices contain less VAT information, but it is only issued by the VAT registered businesses if the value of the invoice is up to 250, including VAT. Invoices that are exempt supplies only are not VAT invoices. Invoices that are for exempt supplies, that's true because there is no VAT is not relevant to the exempt supplies. If a business supplies both standard rated and exempt supplies, or any other taxable supplies, maybe zero rated and of course exempt supplies. So any of those combination that we might still be issuing the VAT invoices depending on the VAT rate and all of that, because for zero rated it's zero anyway. But for the reduced rated, as you know, that's 5% and standard rate is 20%. So in this case, invoices that are for exempt supplies only are not VAT invoices, and that's true, of course. Okay, let's move on to the next part of this question. Tiffany is assisting with a VAT return for a client. Martin Shah, she has asked for your help to identify tax points. A customer of Martin's placed an order for goods on 4th of May. The customer paid a deposit on 11th of May. The goods were delivered to the customer on 14th of May. Martin issued an invoice on 19th of May. The customer paid the balance on 31st of May. Now, if a customer pays a deposit, that is considered as a separate transaction. And for the remaining part payment, remaining transaction is considered as a separate transaction. So in other words, that you will have two tax points, one for the deposit and one for the remaining payment and invoice and all of that. So first of all, if you look at the for the deposit, if deposit is made before the basic tax point. Now, basic tax point is the date when the goods are delivered, are collected, are made available to the customer. So if you think about it in this situation, the goods were delivered to the customer on 14th of May. So if deposit is paid before that date, then the deposit payment date will become your actual tax point. So the actual tax point will be, for the deposit, will be customer paid a deposit on 11th of May. So it will be 11th of May. Identify the tax point for the deposit. So we determined that that's 11th of May. Now, what about the remaining payment, which is the next part of this question? So remaining payment, again, you look at few things. First of all, you look at the basic tax point. So the basic tax point here is, we already established that that's 14th of May, which is when the goods were delivered. Now, if the invoice is issued within 14 days from the basic tax point, then the invoice date becomes your actual tax point. However, if the invoice was issued after the 14 days from the basic tax point, which is 14th of May in this case, then in that case, your basic tax point would have been your tax point for the remaining part of this transaction. So in this case, as you can see, the Martin issued an invoice on 19th of May, which is from 14th of May to 19th of May, which is within 14 days. So therefore, it will be, your invoice date will become your actual tax point for the remaining part of this transaction. The customer paid the balance on 31st of May, which is after the basic tax point. So that's not applicable. Okay, so in this case, for the remaining part of this transaction, the tax point will be the invoice date, because invoice was issued within 14 days from the basic tax point, which is 19th of May. There we go. Okay, let's move on to the, actually, that's the end of the task. So I'll be recording separate videos on the remaining tasks. So I'm hoping that these are helpful for you. Thank you for listening. See you in the next video.